Simply put, there is basically two things that are going to bring up the price of gold and thus the price of silver. Two basic things. It's going to be quantitative easing or downgrading of U.S. debt. They could downgrade the euro all they want. Obviously, it looks like people what they're doing. They're going by historical precedent and running to the dollar as safety. Whether I say that's the wrong thing to do. But if you were actually smart, you should be doing the same thing. I'm buying more metals as they're cheaper, and it's going to take me a little bit of time to get my hands on them because I put a couple orders in to Gainesville Coins, but I'm not going to get them till later in the month in January because even those are just ordinary American Silver Eagles, they're not available to be shipped till another 3 weeks. So go figure why I don't care why the price is going down. It just tells me that's time to buy. But quite obviously, the game is rigged, and you have to figure that it's a good deal right now. This was an article from December 22nd talking about Fitch. You know, the rating agency warning about U.S. debt burden threatens its AAA rating. Well, it's a big story, but it's not going to hit and make an effect right away, obviously. Just like everything, usually when they come out with the big drama story, people react, oh, they're going to downgrade the debt, and it's quite a ways off. And actually, it states so in the article. Fitch Ratings on Wednesday warned again that the United States' rising debt burden was not consistent with maintaining the country's top AAA rating, but said there would likely be no decision on whether to cut the rating before 2013. Now, what is that? How does that jive in with Lindsey Williams has stated? I think his predictions are, basically correct, but I think the timing is way the hell off. It probably won't happen this year. Last month, Fitch changed its U.S. credit rating outlook to negative from stable, citing the failure of a special congressional committee to agree on at least $1.2 trillion in deficit reduction measures. Now, despite what they say, they're not going to cut the rating before 2013. That could be some feel-good stuff to calm the markets because they don't want to create a problem with the markets in anticipation of a cut. So despite what they say, they could be cutting the rating of the United States credit in 2012 versus 2013 or 2014 like they're implying here. They're not going to say exactly when they're going to do it. Obviously, they're not going to do that. This is going to actually, though, affect the price of gold. A no-brainer. And, I like the technicals in a way, and the technicals have a very good track record in a lot of areas, especially since so many people look at technicals and base their decision on technicals. But I also have to look at some other factors that come into play. And just thinking of what China is going to do, they do not want to buy any more U.S. debt. Russia doesn't want to buy any more U.S. debt. Who is going to buy U.S. debt? So say for instance, it still says a AAA credit rating. Well, Chinese agencies that issue credit ratings are downgrading the U.S. So I mean, these are people that are in the government's hip pocket. Moody's, S&P, and Fitch. They're not going to buck the hand that feeds them. So they make nice ratings. But quite obviously, a lot of countries aren't going to want to buy, and people aren't going to want to buy U.S. debt. So what I think is going to happen, because already the Federal Reserve has more than $1.7 trillion that they bought up of U.S. debt. They hold more U.S. debt than China holds. They're just going to keep buying more of its, U.S. debt and more. That's QE. That's quantitative easing. That's what they're going to do. So I can't see them holding to any budget. So I think they're going to get downgraded this year, and that's where you're going to see the metal start flying up again. It's not so much on what the normal thing should be. The fact that you go to a popular site, like I've been plugging their name a lot. I don't sell anything for them, GainesvilleCoins.com, and you're seeing so many coins out of stock, and even the ones they have in stock, a lot of them got serious waiting periods on them, and it tells you that the prices should be increasing greatly, not staying around $29-30. But considering I'm buying some more, I really don't care too much. I had a look at these charts again. This was the gold chart for the year going back. And, this is the only metal that actually showed some kind of gain for the year, and actually a very good gain, a sizable gain. But, I think what happened back here, there was a lot of talk about a downgrade, and that's really what happened. I mean, that's what pushed up the gold, the fact that there was a downgrade. Now, obviously, why did they do the margin rate hikes? What do you think would have happened to the price of silver back here, considering that gold was this high and there was still fears about budgets and things like that? If gold was continuing to stay up around $1,900, $2,000, we would have seen silver exceed $50 an ounce by the end of the year easily. So obviously what the hell they did was to slam it down. But I have to go with the old saying that it's a good buying opportunity. You just got to hold for the long term. But this game is something they are definitely losing. There's no doubt about it, because I'm looking at this euro crashing. It's probably going to bounce up, maybe. I would think when they come out with this meeting at the end of the month, January 30th, that you're going to see this euro have some good news, and it's going to bounce up. Maybe it'll bounce up to like 135, 140, somewhere around in this area. And, that's probably also when you're going to see the silver bounce up. But since I've been also watching how silver is kind of getting slammed down every single time the euro gets slammed down, I think I'm going to use this as a barometer as to when to buy and sell silver electronically, not physically, electronically. I think, I'm going to leave alone what I got on PSLV, but I think that it's a guess, but let me put it this way. They got to do something good for the euro, and they're calling this meeting ahead of time. The last meeting on December 8th and December 9th of 2011, this is the euro chart, right? They did not come up with anything good. So, the euro started tanking over here, right? That's where it tanked. And you notice, you look back to silver, what happened during that time period, it tanked, right? Right here. Went from 32 down to 29 something, down to 29, it tanked. That was that December 8th, December 9th Euro meeting. So there's been a pretty good correlation between this. So what I'm thinking is, I'm probably going to take a guess on this and hold off a little bit. But when I see this euro, say it starts flying up again, I'm thinking that you're going to see palladium, platinum, and silver and the industrial metals start taking off a lot more than anything like with gold. Gold's probably going to sit pretty flat. I think those three metals are going to start taking off after they have this January 30th, 2012 meeting. I think there's taking a guess on this, but I bet you they've been probably, since they had a bad meeting on December 8th and December 9th, 2011, they're probably working behind the scenes now to come up with something that's going to be better, because they're watching this. They don't want this euro to crash. They don't want it to crash. So you're going to come up with something, I think, at this next meeting. Now, considering how the industrial metals, like platinum, palladium, and silver, and I'm calling them the industrial metals, and I know silver is a precious metal more than anything, but You know, the traders consider them industrial metals, and that's what they're making the prices happen. And the prices are what you get for it. You know, unless you're going on eBay and you can find people paying fairly high premiums over spot. That does exist. But as far as the electronic markets, I think you're going to see the silver, platinum, and palladium take off after this next Euro meeting. Now, as far as how high it's going to go, I mean, you know, I could easily see it going up into this range, like the 140 to the dollar. But I'm going to use that as a judge. If I see the euro go up about that high and silver's taking off very well, I'll probably pull out some of it, some of the SLV, some of the palladium, and wait for a pullback. Because I think there might be another bad, you know, deal with the euro, and you'll see those stupid metals pull back again. Where I think all the metals are going to go up is when we have this problem with the dollar and it gets revalued. Or, since they're not going to be able to sell more debt, I think it's almost an impossibility. They're really not going to be able to sell debt that they need to sell, and they need to sell plenty of debt just to keep the existing budget going, even with the cuts, right? They're going to have to do more QE. That's going to bring up the metals too. It's a given. It's like a no-brainer. It's going to happen. But as far as judging exactly the ins and outs of silver, I think if you can really get a good handle on what's going on with the euro, I think you can trade in and out of the silver pretty well. So that's some strategy I'm going to try, because actually the way I look at it, I don't really agree with buying and holding too much, except with physical. I think it's, you know, if you can outsmart, it is a gamble, and I'm considered it's like gambling itself. But you know, I want the money. That's the way I look at it. I want the money. So, you know, I'm not looking to save the world or anything like that. I'm looking to take whatever I can. So that's the way I'm thinking. But I think a good play, and I'm sharing this, you know, on here, you know, I don't have like a zillion listeners, so it's not like I'm telling too many people what's going on and what my game is. But, you know, I'm looking at what's going on with this silver. You know, all the hits, the big hits, besides the margin rate increases, which is, you know, these big obvious super hits, was the euro. And when you see that euro, if they have a good meeting at the end of the month, you're going to see this stuff fly up. The next trick is to determine when you think the euro is going to get hit again. And that's when you need to dump a lot of the metals and buy them back cheap. So that's basically a game I'm going to be playing. But with the electronic stuff, not the physical. For now, I'm still waiting on some orders. And I don't know. It's kind of funny, you know. Looking at the prices of silver dropping, you know, and it takes you a million years. It takes you weeks to get this stuff. So whatever, you know. But either way, so if that's the way it goes, just keep buying it.